Welcome back to Alpha Recap. We're wrapping up Friday's action and unpacking the headlines that mattered after the bell. As always, if you have questions, you can reach us at stockalpha.ai and ask us directly.
Good to be here. So much to get through. Litigation, AI infrastructure, and some really heavy volume names that dominated the tape. Let's dive in.
First up, the legal angle. Australia filed suit against 3M for more than $1.4 billion tied to PFAS contamination. That's a big, multi-quarter remediation story.
Yeah, and beyond that, we saw a cluster of lead plaintiff notices from several law firms across small and mid-cap issuers, names in biotech, software, and energy. The list included SES AI Corporation, Commvault Systems, MedPace Holdings, Gossamer Bio, and New Era Energy and Digital.
And for New Era, there's a June 1st deadline for lead plaintiff nominations. So that one is time-sensitive. Event-driven plaintiffs are clearly hunting.
Right. The pattern is twofold. One, event-driven activity searching for recoverable damages, and two, ongoing governance scrutiny. Both of those can change sentiment quickly for affected names.
Which, when you step back and look at this, can widen bid-ask spreads and jack up option-implied volatility for these companies. Arbitrage desks and risk managers are going to care a lot about timelines and settlement probabilities.
And the 3M case is the single largest potential cash outflow we saw in the briefs today. So expect analysts and credit desks to dig into cash flow and reserve assumptions.
There was one smaller governance positive buried in the briefs. Nuclear Diamond Batteries completed PCAOB audits for fiscal 2024 and 2025. That's a transparency win, but the real impact depends on the audited results that follow.
Short reaction.
Big move.
Okay, moving on to tech, and specifically AI and the infrastructure story. This felt like a broadening of the ecosystem rather than one single headline.
Exactly. RBC reiterated an outperform on IBM and flagged AI security as a multi-billion-dollar opportunity, citing about $5 billion tied to an AI and security revenue mix. That's a vote of confidence for incumbents leaning into enterprise AI.
And then you had chip and systems news. Rocket One joined AMD's AI developer program for chip modeling. Wiwynn previewed co-packaged optics demos at Computex, and Goldman raised targets on Marvell on custom silicon momentum. So this isn't just GPUs anymore.
Right. Middleware, chip modeling, custom silicon, optical interconnects, and execution layers. All of that suggests CapEx cycles for hyperscalers and big enterprises could pick up if pilots convert to production.
Quick point. Wiwynn's co-packaged optics aim to fix an interconnect bottleneck for large models. That's one of those hidden constraints that folks don't always talk about, but it can limit scaling if you don't solve it.
And Accord launched a model context protocol architecture for agentic AI across insurance stacks, a sign that enterprise software layers are getting ready to plug in next-gen models. United Texas Bank also completed an OCC conversion and talked about combining institutional banking with AI-powered settlement and compliance.
So the theme? Momentum beyond chips. Developer programs and custom silicon shorten sales cycles. Optical advances address scaling. And enterprise execution layers create commercial pathways. Put it all together, and the supply chain is maturing.
Quick reaction.
Yeah, that tracks.
Let's talk product launches and market structure. JP Morgan listed a Managed Futures Plus ETF on NASDAQ, but there was a PR correction on the listing details that introduced short-term uncertainty around opening order flow.
Classic launch day drama. New ETF listings often attract flows if they offer something differentiated, but early AUM, NAV creation activity, and bid-ask spreads will dictate whether this one gains traction.
United Texas Bank's conversion we mentioned earlier is also worth watching because it illustrates how regulatory pathways are evolving for banks blending traditional correspondent services with digital asset infrastructure.
Digital Turbine scheduled a management appearance at the Bank of America Global Technology Conference on June 3rd. So that's a direct corporate access event to listen for user and monetization metrics.
Switching gears to healthcare and digital health, Walmart added Teladoc's virtual care services to its platform, which reduces friction for consumers and creates a new distribution channel for telehealth.
And the remote patient monitoring market projection is roughly a 12.8% compound annual growth rate to about $66.33 billion by 2031. Those are longer-term demand signals, but company-level adoption and revenue share disclosures will confirm near-term effects.
Short reaction.
Noted.
Now the market microstructure story. Heavy volume and volatility names. This was one of the more tangible things traders pointed to today.
NVIDIA finished the day down about 1% at roughly $212.60 on about 161 million shares traded. High volume, but not a huge price move. That can indicate distribution or institutional rebalancing.
Nokia, though, fell about 4.7% to around $15.68 on about 121 million shares. Heavy turnover with conviction selling. Not a great day for that stock.
And leveraged ETF activity was extreme. A semiconductor-focused leveraged ETF and a small-cap leveraged ETF posted very large volume prints with notable intraday moves. Those wrappers create outsized intraday volatility and execution risk.
So the inference, heavy volume with muted price change, like NVIDIA, could be distribution or rebalancing. Heavy volume with big moves, like Nokia, signals conviction shifts. Either way, execution risk and position sizing matter for traders.
Rapid-fire updates before we wrap. Enhanced Games captured huge earned media reach. Nuclear Diamond Batteries completed the PCAOB audits we mentioned. Digital Turbine will present on June 3rd. And Group Management Services marked 30 years.
Those are the quick ones. Now let's draw out the patterns we saw today.
Pattern 1. Litigation clustering. Multiple lead plaintiff notices suggest plaintiffs' lawyers are active across biotech, software, and energy, and that litigation-driven volatility could show up in specific names.
Pattern 2. AI ecosystem breadth. Momentum moved from chipmakers to developer programs, packaging, and enterprise execution layers. That's a sign of maturation in the AI supply chain and a broadening addressable market.
Pattern 3. Product and listing activity. New ETF launches and debut corrections highlight continued innovation in wrappers, but adoption depends on early liquidity and spread dynamics.
Pattern 4. High turnover across mega-cap and leveraged or small and mid-cap names points to active repositioning. Trade execution risk is elevated in that environment.
All right, what to watch tomorrow? Court dockets and Form 8Ks for the companies with lead plaintiff notices. Any early filings or company responses will be catalysts.
Also, watch 3M for company statements or regulatory filings tied to the Australia suit, and JP Morgan's Managed Futures Plus ETF for confirmed listing details, opening NAV creation activity, and early spreads.
On the AI front, look for follow-ups from AMD partners or Computex leaks on co-packaged optics demos, and analyst commentary on Marvell and IBM around AI security execution.
Volume and technical follow-through matters too. Whether NVIDIA and Nokia's high-volume prints produce trend continuation or mean reversion, and whether leveraged ETF flows show a tilt toward risk-on or risk-off.
Before we close, a couple of takeaways. 1. Litigation and governance risk quietly became a market story today and can be a short-term volatility driver for specific names.
2. The AI supply chain is broadening. We're seeing developer enablement, custom silicon, and interconnect advances that could accelerate CapEx cycles if pilots turn commercial.
3. Product launches and listing noise matter at debut. Early liquidity, spread dynamics, and PR clarity will influence adoption of new ETF wrappers.
And 4. Heavy volume. Whether muted price action or big moves is telling. Watch flows, execution risk, and whether those prints mark distribution or conviction.
Quick legal and markets reminder. This episode is informational. Analysts note risks, catalysts, and market signals, but we're not providing personalized investment advice or stock recommendations.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you after the next close.